Real-life money systems are the ways money moves through everyday life, from earning and spending to saving, investing, and borrowing. It's not just about cash in your wallet, but how banks, digital payments, credit, and even government policies shape financial decisions. Whether you're buying groceries, paying bills, or investing for the future, you're part of a system designed to keep money flowing across individuals, businesses, and institutions. Understanding it helps you make smarter choices, avoid debt traps, and build long-term financial stability. Today we will talk about real-life money systems. So before we start, make sure to hit the like button and subscribe to my channel. 1. Introduction to real-life money systems. Real-life money systems refer to the structured ways in which money is created, circulated, stored, and regulated within an economy. These systems are the backbone of modern civilization because they determine how individuals earn income, how businesses grow, how governments fund public services, and how wealth is distributed across society. At their core, money systems are not just about physical cash, but also include digital money, bank deposits, credit systems, taxation frameworks, and financial institutions. In today's world, most money exists not in physical form, but as digital entries in bank databases, making the system highly dependent on trust, regulation, and technology. Understanding real-life money systems is essential because every economic decision, whether personal budgeting or national fiscal policy, operates within this structure. Without such systems, trade would rely on inefficient barter methods severely, limiting economic growth and complexity. 2. The foundation of money creation and central banking. The first major pillar of real-life money systems is money creation, which is primarily controlled by central banks such as the Federal Reserve, European Central Bank, or State Bank of Pakistan. These institutions regulate the supply of money in the economy through mechanisms like interest rates, reserve requirements, and open market operations. Contrary to common belief, most money is not printed physically. Instead, it is created digitally when commercial banks issue loans. When a bank approves a loan, it essentially creates new money by crediting the borrower's account. Central banks oversee this process to ensure stability and prevent inflation or deflation. For example, lowering interest rates encourages borrowing and increases money supply, while raising rates reduces borrowing and slows inflation. This system ensures that money supply grows in alignment with economic activity, maintaining balance between growth and stability. 3. Commercial banking and credit systems. Commercial banks form the second layer of real-life money systems and act as intermediaries between savers and borrowers. They accept deposits from individuals and businesses and then use those deposits to issue loans, mortgages, and credit lines. This process is known as fractional reserve banking, where banks keep only a fraction of deposits as reserves and lend out the rest. This creates a multiplier effect, increasing the total money circulating in the economy. Credit systems, including credit cards, personal loans, and business financing, are essential for economic expansion because they allow individuals and companies to spend money they do not currently possess. However, excessive credit expansion can lead to financial bubbles and crises, as seen in global recessions. Therefore, banking systems are heavily regulated to maintain trust, liquidity, and stability in financial markets. 4. Digital money, online payments, and fintech revolution. In modern real-life money systems, digital transformation has completely reshaped how money is used. Online banking, mobile wallets, and fintech platforms like PayPal, Stripe, and regional services such as JazzCash or EasyPaisa have made transactions faster, cheaper, and more accessible. Digital money exists as electronic records rather than physical currency, enabling instant transfers across borders and reducing dependency on cash. This system also includes cryptocurrencies, which operate independently of traditional banks and use blockchain technology for decentralized transactions. The fintech revolution has expanded financial inclusion, allowing millions of unbanked people to access financial services through smartphones. However, it also introduces challenges such as cybersecurity risks, fraud, and regulatory concerns. Despite these risks, digital money systems are rapidly becoming the dominant form of financial exchange worldwide. 5. Government role, taxation and fiscal policy. Governments play a central role in real-life money systems through taxation and fiscal policy. Taxes are collected from individuals and businesses in the form of income tax, sales tax, corporate tax, and property tax. This revenue is used to fund public services such as healthcare, education, infrastructure, defense, and welfare programs. Fiscal policy refers to how governments adjust spending and taxation to influence economic conditions. For example, during economic downturns, governments may increase spending or reduce taxes to stimulate demand. Conversely, during inflationary periods, they may reduce spending or increase taxes to cool down the economy. This balancing act ensures economic stability and sustainable development. Without taxation systems, governments would lack the financial resources needed to maintain national operations and public welfare. 6. Investment systems and wealth creation. Investment systems are a crucial part of real-life money systems because they allow individuals and institutions to grow wealth over time. These systems include stock markets, bond markets, real estate investments, mutual funds, and retirement accounts. In stock markets, investors buy shares of companies, becoming partial owners and earning returns through dividends and price appreciation. Bonds represent loans made to governments or corporations in exchange for fixed interest payments. Real estate investment involves purchasing property for rental income or long-term value growth. These systems channel savings into productive economic activities, fueling innovation and business expansion. Investment also carries risk, as market fluctuations can lead to losses. However, over long periods, investment systems are one of the most effective ways to build financial security and wealth. 7. Global trade, currency exchange, and financial networks. Real-life money systems extend beyond national borders through global trade and currency exchange mechanisms. Different countries use different currencies, such as USD, Euro, PKR, and CNY, and their values fluctuate based on foreign exchange markets. These exchange rates determine how much one currency is worth in relation to another and directly impact international trade. Multinational corporations rely on global financial networks to conduct business across countries, using systems like SWIFT for international bank transfers. Global trade allows countries to specialize in producing goods and services efficiently while importing what they cannot produce cost-effectively. However, exchange rate volatility, trade deficits, and geopolitical tensions can disrupt financial stability. Despite these challenges, globalization has made money systems deeply interconnected, meaning economic changes in one country can affect the entire world. 8. Challenges, risks, and the future of money systems. The final aspect of real-life money systems involves their challenges and future evolution. Key risks include inflation, recession, financial fraud, cybercrime, inequality, and systemic banking failures. Inflation reduces the purchasing power of money, while recessions can lead to unemployment and reduced economic activity. Additionally, digital systems face increasing threats from hackers and data breaches. Another major concern is economic inequality, where wealth becomes concentrated in the hands of a small percentage of the population. Looking forward, money systems are evolving rapidly with technologies such as artificial intelligence, blockchain, and central bank digital currencies, CBDCs. These innovations may redefine how money is created and distributed. In the future, physical cash may become less common, replaced by fully digital, traceable, and programmable money systems. While this brings efficiency, it also raises concerns about privacy and control. The evolution of money systems will continue shaping the global economy in profound ways. But if you like this video and would like to see more like it, please give it a thumbs up, leave a comment, and click the button to subscribe.